In this video, we are going to address the question, what happens to your cash value when you die with a whole life insurance policy? This is an area of debate, especially among professionals in the financial services industry. Typically, you have people that are, call it anti-whole life insurance. They hate it. They'll often state, do you know with a whole life insurance policy, when you die, the death benefit is the only thing that is paid out to your beneficiaries, meaning the insurance company keeps your cash value. Therefore, it is a bad place to put your money and stay away from it. And then the whole life insurance agents hear that and they go and fight with the other individuals, and the consumer's left there thinking, I just want to know how it works so I can make a decision if it's a fit for me or not. So we're going to go through exactly how it works here. On paper, when you die with a life insurance policy, whatever the death benefit is, that is the dollar figure that is paid out to your beneficiaries. We're going to go through an example here. What I want to add, though, is with a whole life insurance policy, your death benefit will appreciate over time, it will grow, and that growth does have a direct relationship to the cash value growth over time. So it's important to be aware of that, and when you see examples, it'll start to tie together and make sense. But what I want to touch on here is with a whole life insurance policy, the cash value, that is a living benefit. That is money you can access anytime, is compounding, is a safe, liquid, tax-free area to position money. 99% of the people we work with will openly express, hey Steve, IBC Global, I don't care about the death benefit, I'm interested in the cash value. But to get back on point with this question, what happens to my cash value if I die? If you have a policy in force and the cash value today is $100,000 and the death benefit on your annual statement, online account is $1 million and you die, the net death benefit of $1 million is what is paid out to your beneficiaries. Think of it this way, the cash value is gone. But if that cash value did not exist, that death benefit might only be worth $800,000. What does that mean? You can tell I like this stuff and have a lot of fun. So, an example. Let's assume day one, you open up a policy, you're about to make a payment, but before you pay anything into the product, your cash value is zero, and you have a death benefit of $1 million. So, I make the payment, I die, $1 million is paid out to my beneficiaries. Now, let's assume that I fund the policy for a period of time, and over 10 years, my cash value with the same whole life insurance product has grown to $100,000. My death benefit may now be worth $1.3 million. Could be a little bit more, could be a little bit less, depends on the design of the policy, my age, how long I'm paying into it, a number of factors. But typically, you will see a pattern like this. We're going to pull up an example very shortly, where as I grow that cash value, my death benefit grows as well. So what this means is $1.3 million is paid out, let's assume I died in year 10, then $1.3 million is paid out to my beneficiaries. So I have grown the cash value to $100,000. If I die, the $100,000 cash value is not paid out to my beneficiaries, but instead they get an additional $300,000 in life insurance, which is paid out income tax-free. This was a big reason someone in my family purchased a large whole life insurance policy. He was not that interested in the cash value benefit, although he's heavily funding it. He really looks at it from an estate planning play where he says, you know, the death benefit, if I continue to pump money into this, I leave a much larger dollar amount in pure life insurance benefit. I see it, I get it, okay, I'm sold on it after 10 years of analyzing it and such. But as we look at this, main thing I want to touch on, I pumped money in, my cash value grew to $100,000, death benefit was $1 million, now it's 1.3. So look at it this way, what happens to my cash value when I die? It's not paid out to your beneficiaries. But would you be comfortable with this if this is you, your cash value has grown to 100 grand, but the death benefit's not $1 million anymore, that's 1.3 that's paid out to them. Let's look at an example here. So what we've got here is a policy that is designed for maximum cash value. So this is someone who is interested in the cash value benefit, not so much the total death benefit. What I'll add is if a policy is designed for maximum cash value, it will often result in the greatest long-term death benefit as well. which is interesting. But as we look at this guy, here's our annual outlay. So this individual is paying in $30,000 per year. And we can make the dollar amount any figure. Where's the money going? Here's his underlying premium, as low as we could drive it, 10% in this particular example. So 10% toward premium, plowing everything else into riders that accelerate the cash value growth. Cash value in the first year, 26,211 net death benefit. Let's circle this in red, 1.243 million. So if he dies on day one, what would happen? That $26,000 in cash value, he would not receive a check for that, or his beneficiaries would not receive a check for that. They would receive a check for the 1.243 million. Now, as time passes, he was 30 years old when he started, pays into it by year 10, 30K per year, which he doesn't have to pay that much each year. He can bounce payments up and down. But what has your cash value grown to? Almost $350,000. Okay, so if you die, that $350,000 is not paid out to your beneficiary. However, the death benefit was 1.2, now it's 2.4 million. A little bit less than doubled here. So it has appreciated quite nicely. So again, if it's you, which one would you rather have? The death benefit day one of 1.2 million, because if it's a term policy, that will not increase over time. Term policies are typically level. So assume it's 1.2 plus the 350 or 347 in this example, or I see the cash value grow to 347, and then if I died 10 years into it, the net payout is $2.4 million to my beneficiary. Another way to think of it, because this can be confusing sometimes, is this death benefit accounts for the cash value growth. So the total death benefit accounts for everything I've paid into the policy, any dividends that have been paid. This is the net dollar figure that is paid out to my beneficiaries. As I continue to make payments, I see the same impact. So here's an example. He keeps on funding it, 30 years into it. There's his cash value, almost $1.8 million. Death benefit has grown to $4.6 million. So he started out day one with a $1.2 million death benefit. Over 30 years, he's grown the cash value to almost 1.8. The death benefit is 4.6 though. That is paid out 100% income tax free. And we can continue to look at the years as they pass, as he continues to pump money in this example for 50 years. But let me touch on something, because if I was presented this, my reaction would be, well, I don't want to have to pay 30 grand per year or any dollar amount for 50 years until the guy's 80 years old. Like, a lot of people are turned off by that. So here is the exact same policy where we only pay into it for 10 years in this example. So same policy, there's our minimum premium. As we look at this guy, here's your 30K payment. There's your cash value, identical value, 26,211. Death benefit, identical over here, 1.243. Time passes, 10 years into it, you've paid in 300. Look at your cash value. It's identical to what it was in the last example. 10 years in, just under 350K. Death benefits, 2.4 million. And then after that, we stop paying into it. We can see it right here, annual net outlay. Beginning year 11, nothing. And then we made some adjustments here, really to maximize the cash value performance. So look at this. We reduced the death benefit. So this was a move or a lever we pulled on the policy in order to optimize cash value growth. But what's interesting about it is this. So again, you paid in a total of $300,000. There's your cash value appreciation, continues to appreciate over time. As it grows, what happens to your death benefit on the far right? Does it stay the same? No. Appreciates as time passes as well. So I could argue this, 30 years into it, I paid in a total of 300 grand over the first 10 years. cash value is almost $870,000. And if I die, $2 million is paid out to my beneficiaries. And of course, you could make additional arguments to say, hey, with a term policy, maybe I pay $500 or $1,000 per year and invest the difference. That strategy works. Both of the strategies work. It's really just understanding which one is best for you and then moving forward with that. Maybe it's a combination of both, which we have people that do that. I think where the issue pops up in the industry, and this is on both sides of the fence, is from an objective standpoint and an emotional standpoint, you'll have two sides that are in favor of whatever they sell and they fight each other. And sometimes consumers get pulled into that as well. Really, as a consumer, what I like, if I'm a consumer, is just provide transparency, show me the pros and cons. In this case, answer the question specifically, what happens to my cash value when I die? If I were to give a quick answer to that, and we'll sum up with this, is if you die, on paper, the death benefit is paid out. So whatever you see as far as your net death benefit on paper, on the illustration, on the annual statement, that's what's paid out. However, that death benefit does account for your cash value growth over time. So if day one, you have a $1 million death benefit, and then your cash value over 10 years has grown to $100,000, your death benefit might now be worth $1.3 million that is paid out to your beneficiaries. So I hope that this video was helpful. If you liked it, please hit the like button and subscribe button. If you didn't like it, I love you anyway. Feel free to reach out anytime and we will talk to you soon. Have a good one. Hey guys, Steve Parisi here. If you enjoyed the content you just saw, please subscribe, like, and hit the notification bell for future videos. If you'd like more information or to see some custom policies for yourself, feel free to call or email our offices at the contact information below.